Hello, everyone. Welcome back to Edwards Trades. I hope you guys are having a fantastic week so far. I'm here again to bring you another quick market update on the SPYs, the QQQs as well. I'm gonna be going over a core list of companies. Um, for the record, I would like to apologize for the video that I posted. For I believe it was Sunday. I didn't realize that the video came out a little weird. I may have misclicked something while recording the video mid session, but I realized till now that the video came out a little bit zoomed in when I watched the video. I don't know if you guys were when you guys watched the video, you guys noticed that, but I'm gonna do another brand new recording right now, and still the information is kind of relatively the same. I'm not disregarding anything that I said in my last video, but I'm just gonna you know explain what's happened throughout this week, and hopefully you guys can see it a lot clearer this time. And I will try to fix the recording in case that happens again, but I apologize for that. But let's get right to it. So we're looking at SPY right now. So as I mentioned Sunday, we are kind of um we're still on a bullish trend overall, but now I'm starting to lean towards bearish territory, or I'm seeing a little bit more bearishness in the overall market. As far as from Monday till now, there's been a lot of sideways action here, as you can see here, starting from, of course, we gapped down. I believe this was Monday's trading session, which was the 22nd. We had a big gap down from from last Friday, and now we're kind of like sideways, neutral, not a whole lot of movement. Especially the volume percentage has kind of slowly declined. If I click on volume, the overall volume, I'm gonna wait for it to load real quick, but the overall volume for, I guess it's not gonna show. Anyway, but overall, the overall volume that I'm noticing throughout the market has been kind of deteriorating. It's kind of slowing down a little bit. I guess I would assume that now there's not a lot of action that's been taking place across the tech sector, and that's mainly because a lot of investors are waiting for the meeting that's this Friday, Jerome Powell, to speak about interest rates and inflation. So we're gonna wait and see. I'm guessing the market is going to wait and see whether or not they're going to increase interest rate hikes, or they're going to keep it roughly the same. So, again, a lot of sideways continuation up until now. My only concern about this is I'm kind of leaning more towards bearishness because the tech sector, if we go to the 4 hour time frame here, the overall market has been kind of rejecting this level here. We're kind of accepting lower prices, and that typically is not a good sign because we want the market to move higher. For those who are bullish and like stocks going up, we technically want the stock market to be able to break above previous levels here. So we're kind of consolidating in this range here. So if I were to put back my drawings here, if you guys can see here clearly that we're kind of like rejecting this previous resistance zone from, I believe this was January, February, March, April, May, around May in this area. And of course, like last time, from May to June, we kind of had a big downfall drop here. So we're kind of again in this same territory. Again, we have like rejection at this resistance level for SPY, which is right around 4140, and we're kind of in this range here. So typically I'm leaning more towards bearishness because we're kind of accepting this we're kind of constantly rejecting this range here. The same resistance that was here during May is kind of like affecting the SPY right now. And typically again, it's more bearishness because bulls are not able to push above and break this prior resistance. So I'm leaning towards possibly a drop in the market sometime this week. And also, if we want to go in a if we want to look at a smaller time frame, so let's say look at the 20-minute time frame, you can see here that let me go ahead and zoom out here. Again, like rejection here upon this region here, rejection, 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 until this was obviously the beginning of August that we've gapped up. But now again, we're kind of back in this region. We had one rejection here, two, close to three, and then again we're not able to break above these levels. So my overall outlook for the rest of the week would have to be that we are kind of expecting another pullback to take place. It could be a higher low situation, but to get really technical, the pattern that I'm looking out for is possibly a head and shoulders pattern. So typically a head and shoulders pattern is a bearish pattern, and the reason why I say that is because if you guys were to Google a head and shoulders pattern, we kind of have a left shoulder here. We kind of had the main head here. It's kind of like head, shoulders, knees, and toes, like the song. It literally is head and shoulders. We have the head portion here. If it were to draw here, the head portion here, and we're kind of waiting on the right shoulder. So again, my outlook for the rest of the week and possibly the remainder of August to December will probably be bearish because it's almost the end of the month. But again, we're just rejecting the 4140 level, and if we're not able to break and hold that level, we can possibly see more downside. So in other words, the market could form the right shoulder, causing the pattern to play out, and then this would more than likely fall over to resistance down or back down here in this range. So overall, again, I'm just basing my analysis off of the week throughout this week. It's been super choppy, not a whole lot of movement. Again, buyers and sellers are kind of equal in terms of movement, but again, we're rejecting these levels here, which is kind of crucial, especially during this time of May through June. So again, if we're not able to accept these price ranges, or if bulls aren't able to break over this region here, we can possibly see more downside throughout the rest of the week. And again, my assumption would be that the investors are just waiting to see what Jerome Powell is going to say about interest rates. But again, I see a head and shoulders pattern, so maybe I'm possibly suggesting that the tech sector is going to fall over and we're going to, come back down and have a wider range pullback. And to get really as far as retracement levels goes, in other words, like how far would I say a pullback is healthy? If we were to bring out the Fibonacci retracement here, we could be sitting right around 38.2 retracement is where. So in other words, if we want to remain bullish, we would have to retrace to 4096, bounce off these levels here, this other prior resistance, and continue to move up. But for right now, we're kind of been sideways. It's been a lot of choppiness throughout this week. So we'll see what Thursday and Friday will reveal to us later this week. So I'm going to go ahead and move on to the QQQs. So let me go ahead and get rid of this real quick. Give me 1 second. If I can. No. I apologize, but go ahead and do that. Perfect. All right, now we're going to take a look at the QQQ. So again, kind of the same thing. Let me go ahead and, say the same exact, or actually let me go ahead and show my drawings. Again, we're kind of in this like sideways range here. Again, we're not really moving anywhere. It's been a whole lot of chop. If I want to go to the hour time frame, we're just been sideways. Not a whole lot of movement here. Just been choppy ever since Monday. Sideways consolidation. I could assume that this is possibly a bear flag situation. So a bear flag is typically we kind of like this. It's literally like a flag, right? And if a bear flag pattern here, so we're possibly waiting for the market to move lower, which would support the head and shoulders pattern overall. But if this were to play out, I expect the markets to move lower. We drop down all the way back down to these previous if we break this level here. So actually, let me go ahead and move this up just so slightly here. There we go. So if we were to break the 314 level, 313 roughly, we can possibly come all the way retrace back down from the last CPI data number levels all the way back down here, which would be around 308, 306 ish, which was previous support. And if we go back to the daily time frame again, we were gonna right here, just like the SPY that I mentioned earlier, we would be kind of sideways in this choppy area again, consolidating. And we don't want to see that, especially since I've been a bit bullish, but my stance is kind of leaning more towards bearish, just because of the fact that we're just sitting here in this range, kind of accepting lower prices, and that's typically not a good sign. And because of that reason, I'm gonna assume that the market is kind of expecting more downside for the rest of the week. So I'm gonna go ahead and start going over the core list of companies. So the next company that I'm going to take a look at is going to be Apple. Let me go ahead and fix this real quick. Yeah, there you go. All right, so let's take a look at Apple. So all right, so let me go ahead and get rid of all this extra stuff here. But again, So since the spies and the QQQs are kind of and the tech sector are all kind of cohesive in terms of movement and how they react towards one another. Again, I'm going to say that. Let me go ahead and get rid of this real quick. All right, perfect. Again, if we want to go to the smaller time frame, or roughly around the 4 hour time frame here, right here. Again, kind of reject. Apple has been rejecting the 168 region here. Let me go ahead and see if I can. All right, I'm just gonna have to leave it like this. But as you can see here, the Apple's kind of been rejecting this 168-ish level. We weren't since Monday. We gapped down during last Friday's trading session, and now we're just sitting here sideways consolidation. Again, I can assume that this is a bear flag play out that's coming in, but we just constantly are rejecting 168 levels here. And again, if we break 16, I believe this is 166, we're possibly going to head all the way back down and retrace towards 160. So again, I'm not really liking the movement that's been going on throughout the market for this week. So again, a whole lot of choppiness, not a lot of movement. Also, I want to go into the smaller time frame, the 30-minute. Sellers were, as you can see here, look, it's a little bit clearer here that we're clearly rejecting the 168 level. Every time we try to shoot above it, we come back down, and so on and so forth. So if this keeps rejecting, we have one rejection here, two pre-market, and then throughout the day as well. If we keep rejecting these levels again, I'm assuming that that bulls are getting tired, they're getting weak, and just a whole lot of weakness in the market, and expecting it to come right back down. We tagged 166, and not trying to confuse you guys, but 166 is prior support here in this region, as you guys can see right here. But again, we were able to break. Sellers were able to drag the Apple all the way down to 166. And if we were to break 166, the next level would be 165. And if we go to the daily time frame, I'm assuming that in the near future we're going to this little hole that we have right here. They're called gaps. I'm assuming the sellers are trying to fill this gap, but buyers were able just slightly to push the market to green again. And I mean, the volume is kind of like, you guys can see the volume below here now, but like I was trying to show you earlier, volume's kind of dying off a little bit, so it's kind of not a good sign. But again, 167, if we break above 160 and hold above it, we can probably reach head towards 170. Again, my stance is a little bit more bearish, so I'm possibly seeing maybe a breakdown in the market if we are not able to break above 168 and we come back lower, break 166, retest a 165, and then more downside across the market. So that's Apple. We're going to take a look at Tesla. So again, whole lot of choppiness here once again. We're just kind of like in this sideways consolidation here. As far as like if we go to the 4 hour time frame, we kind of have this like again, just overall choppiness, not a lot of movement here. We're kind of still accepting above 870 roughly. This price range here, which is resistance or support at the current moment. We're not able to hold above 900 or 915, 900-ish. We're just sideways, not really doing so much. But again, as far as technical levels go, if we break below this general region here, the next level of support would be right around here, which would be right here in this region. Go ahead and mark this. Would be around 820, 837, and the next drop would be right around roughly right here, which is around, I think it's 765-ish. So I would look out for that in the near future. But again, with this overall weakness in the tech sector and as far as candle structure, there's just been no volume throughout this week, and that we're just waiting to see if the market's going to push higher or push lower. But again, with this how the structure is at the current time, I expect markets to move lower for the remainder of the week. But let's go ahead and look at another core company. We're going to take a look at AMD. So AMD, kind of the same thing here. We're rejecting the 94 resistance level. We've gapped down, or not gapped down, but we've dropped. We rejected prices above 100, which causes this selling pressure to take place, and now we're kind of sitting fairly neutral around I believe 93, $92. So if we want to go to the smaller time frame, again, rejection above 90, I think this is 94 region, resistance here, prior resistance here, support turned into resistance. Again, support. Now it's turning into resistance here. From we've touched once, twice, three times here, you could say. And again, the market is just moving lower. So levels to look out for. If we keep rejecting the 94 region, the next support level will be roughly 90. If we break 90, the next level will be right around 84, 85. If we're able to hold above 90, 94, turn it into support like we have here, the next move up would be 98, and then from 98 would be roughly right around 100 above 100. And yeah, so again, just overall, tech sector is not really looking too good. Sideways chop. The market, again, as you can see here in the bottom range, like the volume has been fairly decreasing. Not a lot of bulls have been stepping in. Not a lot of buyers are taking place. Sellers are kind of taking a little bit of control here. So we'll see how the market plays out. And again, my assumption would be that they're waiting for the Fed meeting, not the Fed meeting, Jerome Powell to speak this Friday, which is going to be the 26th at 10 a.m. So next company is Nvidia. Nvidia is another chip company. They did have earnings, and as far as earnings goes, I do believe that they didn't do so well. I'm gonna go to the 5-minute time frame. Let's see. Oh, this isn't the right one. Okay, there you go. Yeah, massive drop. For those of you guys who don't, or they did have earnings, and as far as the information goes, they their sales numbers were pretty bad. They did pretty terribly. They expect the gaming revenue has decreased, which causes large downfall here. This waterfall, the market sold off. And as far as levels to look out for tomorrow, let me go ahead and make a note here. I thought I drew it here, but I guess not. So as far as structure goes, typically when earnings plays out negatively and sellers are driving up control, we're possibly waiting for tomorrow. We might have we're possibly gonna have like maybe a little bit of market relief for Nvidia, so the market may rally the Nvidia may rally just a little bit for those who got caught off guard during earnings. Again, levels to look out for, since we kind of broke support around 170. We're kind of sitting right around 163. If we're able to break 170, the next low I will look out for would be 180. But as of right now, it's really up to the buyers on what they want to do with the information that's given about how badly their sales numbers came out to be. But again, if we continue to drop, the next level of support would be 160, and after that, we'll just be right back down to newer lows. So the next low would be in this region, which is right around here. Let's go ahead and mark this here. What I would assume would be right around 148-ish. But yeah. And then we're going to take a look at Microsoft. And then lastly, we'll take a look at Facebook, and then that'll be the end of this technical analysis video. So we go to the daily time frame. Again, just straight up choppiness, as I mentioned earlier. Even here, you can see maybe Microsoft is probably forming a head and shoulders pattern. But again, just like I mentioned earlier, last Friday's trading session, the market opened Monday on a gap down. We've rejected the 292 region, which was obviously here prior resistance from the start of April all the way to May. And then, of course, we finally rejected these levels and we've broken down here. So major levels to look out for. Since we kind of are gapped down and we kind of opened up in this kind of like region area here. Let me go ahead and get rid of the drawings here. We want to be able to hold above 282. If we want to continue to move up higher, break 293, and the next level that we're going to be looking at would be roughly 302. But again, rejecting these levels here, we're kind of, again, volume is kind of decreasing here at these levels. So if we were to break down and pull back a little more, or the market wants to remain come back to being bearish, the next level I'm looking at would be roughly 270. If we break 270, the next level I'm looking at would be right around here in this kind of like congestion zone here, which roughly amounts to, let me go ahead and just adjust it just a little bit, around 248, 250 area here. Again, we don't want to be back down here in this congestion region, because then, you know, that just shows that sellers were in control and that buyers were just not there to step up. But again, overall, the tech sector has just been fairly sideways, and I'm again leaning more towards a bearish outlook for the remainder of August. Now we're going to take a look at Meta, and then that will be the last core company I'm going to evaluate for this week. Again, go ahead and get rid of this. I don't need this anymore. All right. So again, fairly the same. We've kind of just been sideways in this neutral zone here. Facebook or Meta, excuse me, has kind of just been, you know, sideways choppiness. Again, just rejecting the 170. I think this is what, 172 region, and then, you know, right here, which is right around 160 region, just sideways chop. Not a whole lot of movement going on here. Volume is fairly decreasing from a 4-hour time frame. Again, you know, just sideways chop, not really doing much. Sideways again. If you want to take a look at technical levels here, if we break 172, the next resistance we have to break would be 185. After we get rid of this kind of like congestion region right here, which is 179, 185 is what I'm looking for. And then if the market wants to assume lower, if we break 154, if we go to the weekly perspective, the next level will be right around 137 here. Yeah, 137 here. So that's pretty much it as far as how the market is looking like. Again, I'm leaning more towards a bearish stance in the overall market, just because of the fact that, you know, from what I've showed you guys throughout this video so far, that the market is really not doing a whole lot at the moment. It's kind of just been sideways, accepting lower price ranges, especially for SPYs and the QQQs. You know, things are subject to change throughout the time, but I believe that the main issue why we're not really seeing a whole lot of movement is because they're waiting to see what Jerome Powell is going to say for this Friday's what's it called, meeting. So we'll see what we'll see what will happen. But again, I'm kind of siding towards the bearish stance, just because of the fact that I'm not really liking that bulls were not able to, if we want to go back to SPY one more time here, so you guys can kind of get the gist of what I'm trying to say. Let's see here. Again here, like we did, again, if we go to the daily time frame, where, you know, buyers are not able to step up and close this gap that took place from Friday's trading session, you know. And, you know, we've kind of been, it's been 3 days now since Monday that we just been, you know, sideways, you know, rejecting these levels at 415, which is, again, is not really a bullish sign. It's kind of bearish. So the longer we reject these levels, the more likelihood that selling pressure is going to take place and drive the market downward. So yeah, pretty much I see a head and shoulders pattern here playing out, possibly. Again, if that were to take place, I expect the market just to be waiting on, I'm expecting the market just to come down far lower, and I already mentioned the levels here. Again, this is what I'm possibly seeing as at the moment. So we'll see what will happen throughout the remainder of the week. But I hope you guys enjoyed this video today. Again, I apologize about the last video. I hopefully this video comes out clear and there's no issues with the zooming or the zooming in mid video or something. Again, I don't know what the issue was, but hopefully I fixed it. And I'll be seeing you guys this Sunday, where I'll make another updated video on the overall tech sector and the broad market. I hope you guys enjoyed the video. Be sure to give a thumbs up and a like. And yeah, I'll be seeing you guys this Sunday. And yeah, I hope you guys enjoyed the video. So see you guys within a few days. So yeah, peace.